Hi, it's Behrin. How you doing?
Oh, you did it
Behrin,
right, Josh. Good job, man.
nice. Yeah, great to meet you, man. So you're the founder of Neutrl, which is a DeFi protocol offering a synthetic stablecoin designed to provide market neutral yields. So lots of questions about just embedded in that statement. So your mission is to generate and pass on the highest delta neutral yield, real yield to users, which is you said is something DeFi
Yeah,
hasn't seen before. So can you just tell us what that means?
yeah. So largely, there's a few DeFi yield stablecoins or synthetic dollars that's been around for a while. Most of them are focused on either like U.S. Treasuries or passing on like 4 to 5%, depending on market conditions. Then you have this powerhouse that came about 2 years ago, Athena, and their USDE. And what they did was they took a one of the oldest trades. I think if you're being a trader in crypto, which is just liquid delta neutral basis on like Ethereum and Bitcoin, and they wrapped that and tokenized it. And I think they have shown the real like product market fit behind these hedge fund strategies that has existed. And the beauty of it is once you have it in a tokenized form, you can actually use it across DeFi. You can use it across Pendle, Aave, Morpho, Euler, etc. And that's where the beauty of DeFi composability comes into play. What we're doing in Neutrl is, I think, being a trader for the last like 7 years, realistically, and like early DeFi OG, we see yield come and go. So you have these positions of the market when things are super bullish, and there's a lot more leverage in the system, and you see liquid basis really go up on delta neutral aspect. And then you have yield like MEV arb that comes in and out, and these things are often fleeting or last like a few weeks, or hopefully we get like a 6 month run like we had last year and the year before. But what we've been running pre-neutral is this thing called OTC arbitrage, is where we can buy tokens of the top 100 coins, which we've done at steep discounts. So think of things like Solana, Avax, Sui, etc. You buy them at between like 20 to like 40% discounts. And at the same time, you can then hedge your exposure on the price. So here's the spot price trading across all centralized exchanges and venues and DeFi venues. And this is where we buy it at. So we buy this portion at the steep discount, and then we hedge using perpetuals that are actually about 10 times. There's 10 times more volume of perpetuals than actual underlying spot crypto tokens. And over time, we can unwind this discount. So it becomes real trading yield. And that's what I mean by real trading yield, because there's often yield in crypto that, like Ponzinomics or just a token emission that's being paid out to users.
Yeah, Josh and I were talking before the show, and we're like, is this another one of those algo stable coins that we should be very afraid of? But so I guess maybe the better way to ask that question is like, where is there new risk in this system?
So it's definitely not an algo stable coin. The reality is you can actually keep, I wouldn't call it a stable coin firstly, but like synthetic dollar, you can keep it close to one or at one just by actually automating these strategies and opening and hedging at the same time, similar to how USD works. The real risk, to be very open and frank, I think that's important, is around actual a token of the underlying portfolio, like rallying, like doing like a 5x or something, right? But realistically, what we've seen over the last cycle, since 2021, like vintages, there's so many altcoins in the space now that didn't exist before. If you look at token unlocks for the next 2 years, you can look at tokenomics. I think Wu Blockchain published something today earlier as well. There's about $55 billion in token unlocks coming in the top 100 coins. This is something that's not really sustainable. This is why you see things like doing well in like pockets right now, or things that have DATs behind them that raise capital from outside the system. Otherwise, it's a pretty safe strategy. But that would be the risk on running the trade if it was one like product that you like one trade you did. But the way we package it is we create a portfolio effect, right? So most of the actual underlying token is liquid collateral. So we run liquid basis on it. We run it on anything that is delivering good liquid delta neutral basis, not just stuck to Ethereum or Bitcoin. And on like the OTC arbitrage portion, we're running about 20% right now. That's delivering closer to like 60, 70% APR. So it's like a blended type of aspect.
Why do you make such a distinction between stablecoin and synthetic dollar?
I just think it's kind of won't use the word rude for lack of a better word, but realistically, is a stable coin something like USDT, USDC that has $1 behind it that should actually have the reserves attested. And I think a lot of these other dollars that have come out, I mean, there's things calling themselves stable coins, but they're largely like wrappers on Aave delivering yield. I think all of that's like a synthetic type of instrument. Really, right? It can have the same characteristics as being $1 and being used across DeFi like that across lending markets if the underlying risk is managed. But I wouldn't call it a stable coin. So,
How do you think about standing out in this sea of kind of endless DeFi products or yield opportunities? Is it purely just offering kind of high durable yield and that's a game, or how do you think about that?
I think it's a very good question. It's quite a philosophical question that we discussed before deciding to do Neutrl, because realistically, we ran these strategies very profitably. Most of the top funds, market makers run it. It's all private. That's why you kind of access the retail. And you could have done it as a family office. And sometimes when I look at the returns, I'm like, yeah, maybe we should have just kept it as a family office. But realistically, how we'll stand out is no one has access to these tokens, right? One of our investors is Stix. They're actually the largest OTC broker in the space. They're doing over $100 million in flow. We're seeing a lot of it very early now, so we're getting the best deals. I've seen over 800 million in OTC deals since the last 3 months, just for Neutrl, I'd say specifically. We're cherry picking. We only deployed like 13 into it right now. The rest of the 50 millions in liquid. That's one thing. And I think what will happen is, I mean, okay, on Saturday, basically one of the largest funds in the space like messaged, and he was like, we run this OTC up. You guys know that, like we from prior Neutrl. What I think will happen is that you're just going to start seeing more and more deals for us and a bit better, and we rather use Neutrl to deploy it. And I think having the highest yield is important for product market fit. And we wanted to build something before, like trying to raise capital and running strategies that we knew that had PMF that doesn't exist. We're not just another copycat wrapper on US Treasuries or doing something on Aave that's wrapping Aave like yield for 5%. I mean, there's too many choices, right?
I'm curious about your, I mean, yeah, obviously this stable coin generally is like the big hot topic over the last little while. Maybe the broader sort of trend here is just more TradFi opportunities coming on chain. Obviously the regulatory environment being one of the shifts that's happening here. I'm curious, as you sort of look forward from where we're sitting today, do you have a comment on how you think things are playing out directionally?
I think there's only really been three. Oh, I mean, I'm a bit biased, right? More from a trading perspective, but there's really three products that have had proper product market fit in crypto over the last like years. One is just exchanges, right? Allowing actual venues and like other trading tools that people can use. The other is actually perpetuals. I think that's what really made all of this possible, to be very honest. And the amount of like volume we see in perpetuals now is like anywhere between 5 to 10x like spot trading volume. So it allows you to run these strategies. It's a lot more liquid than spot. That's why people sell OTC and Delta neutral funds actually run it. And the third are stable coins and payments. And then using like actual stable coins like USDT or USDE now as collateral on Bybit or wherever you're doing it. What I think could happen is we'll see a lot more proliferation of actual tokenized strategies. So it's very interesting. Like a lot of our LPs right now, we're private. We just have over 50. We'll be public in like the next month, pushing very hard on that to open it up. But realistically, they are not crypto DeFi yield farmers or like leverage loopers, right? They actually family offices, and they like, wow, okay, we've seen your returns before. We know that it's the risk where it lies. We know like it's delta neutral and you're hedging it out. And if you can offer me anywhere like in mid-teens on like 20 million, $30 million, that's something I would deploy into, because what other thing am I going to deploy to from a family office? So I think like a lot of these type of strategies that are going to be suitable for TradFi, and I hate saying that, because we've all been waiting for TradFi for like 7 years, like realistically. But now I think it's finally coming, and they do understand it. So I think it's just good overall for the space.
How large can this, or quickly can this strategy scale? Like, are you constrained on the OTC markets and how many deals you see there?
Not really on the OTC markets. If I have about $350 million of deals I could deploy today that I think would generate north of 25 to 30% very comfortably with enough margin, etc. I think the strategy on the OTC side, from being like a bit rational, I think like 500 million to generate around 30%. But realistically, the entire actual stablecoin is not just ODC. So easily we go to like 3 billion very easily and still have very competitive yield. That's real trading, because most of it is still liquid, delta neutral. So it's running basis. It's using USD because I've been a bull of Athena for a long time, but the actual capital efficiency it gets you to use USDE on an exchange like Bybit, and then once like Ethereum actually comes out as well, they exchange, you're going to be able to use USDE, run your trade basis on top of that. You're basically getting paid USDE leverage, then you're getting paid basis. So yeah, billions I think on that. But on the OTC element, at least I could deploy 500 million like in the next couple of months.
Wow.
Without going long tail. I don't want to go long tail, right? I think like it's not necessary.
What would you consider long tail? Like what, top 100 is not long tail, top 10?
Well, it needs to be something like very roughly. I mean, we look at it very quantitatively, but I think something with enough open interest, enough volume persistently, no new launches, pre-markets, etc., that people are like just aping into, but things that have been around for a while, multiple venues. So Binance, Bybit, OKX, yeah, etc. Upbit. And I think it needs to have been around for a while. Like for instance, we get a lot of these new tokens that launch. Last December, we got 10 calls about people trying to sell like Move, like when it was like 12, 14 billion. I mean, it would have been a great trade, but it's not something we'd do, just in case.
I'm curious about where trust comes into the system. It sounds like you're private right now, and so I'm assuming LPs are coming in through some sort of contractual arrangement with you. As that begins to open, and maybe I'm incorrect there, but as that begins to open up to the public, where are people needing to trust you or your organization versus where are the protections?
Yeah, so a lot of the first person I spoke to about this, like deciding whether to do it as a tokenized product realistically and would it work, we've been very close to a lot of DeFi teams and OGs, but it was actually Guy from Athena, the founder there. And I think like the important aspect is like they build trust around the transparency. So we will show a lot of that. That'll be coming out pretty soon, even though it's not public yet, but we'll show what's happening privately. We'll have a lot of attestations from actually where we hold collateral, as well as showing the different multiple venues like real time of what's happening. And I think around transparency, like versus a market that's previously OTC has just been for the elite few, like a few funds and some really big angels, like really that can get the terms. And I think trust isn't like earned in a day. I'm not naive around that. It's not something we're trying to like just get out very quickly, but I think it's something that we can build over time, especially as people start seeing it working, and like we're very strict with who we work with as well across DeFi.
All right, then. I think we'll leave it there. It was fun. Josh and I were checking in before the call here, and we're like, what is actually going on here? And I actually feel a lot smarter from it. So
I also now want to use it, which is a good good indication.
Appreciate it.
Give me some of that. Give me some of that. Behrin, appreciate you hopping on, man. Yeah, let us know when you go live publicly.
Thank you, guys.
All right, brother. Cheers.
Will do. I appreciate it. And thanks for having us.
Of course, man.
Pleasure.
Peace.